Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I have the pleasure of being joined by Dr. Wang, Chief Financial Officer at Lotus Technology, Nasdaq, ticker symbol LOT. Also joining is my Water Tower Research Equity Research colleague, Eric Goldstein. Lotus Technology is the Nasdaq-listed intelligent and luxury mobility arm of one of the most storied names in automotive history. Founded in 1948 and reborn under Geely's ownership, Lotus has transformed from a legendary British sports car maker into a leading intelligent and luxury mobility provider with operations across the globe. The lineup spans the Emira sports car, the Eletre electric SUV, and the EMEA electric sedan, and the brand new 4ME super hybrid, aka Eletre X, in the EU and UK, built on a proprietary 900-volt X hybrid architecture that delivers more than 950 horsepower and over 1,400 kilometers of combined range. In fiscal 2025, Lotus delivered 6,520 vehicles and generated $519 million in revenue, while narrowing its net loss and more than doubling its gross margin. The company runs an asset-light model supported by the Geely ecosystem and is now advancing a strategic acquisition of Lotus UK to unify the brand under a single global platform. This is a company sitting at the intersection of heritage, luxury, and the electrification of performance, a very timely and compelling conversation. So let me start out by welcoming Dr. Wang and Eric to today's podcast. Good morning, gentlemen.
Hello,
Morning.
morning.
Dr. Wang, I'd like to start with a simple one. For generations, the name Lotus has meant lightweight British sports cars and Formula One glory. Today, Lotus Technology is a Nasdaq-listed company building electric SUVs, sedans, and super hybrids at a global scale. For an investor encountering the company for the first time, what would you want them to understand about the company and how is the heritage and the technology fitting together today?
Thanks a lot, Tim, for the introduction and also for the question. I think to the first-time investors evaluating LOT, let me clarify two critical layers of our identity and also how the heritage and the tech reinforce each other. And first, Lotus Technology is far more than just a niche British sports car brand. It's already a global intelligent and luxury performance mobility provider, scaling mass combustion sports cars, premium battery EV SUVs and sedans, and our new 900 voltage super hybrid lineup across all major markets. And our 78 years legacy of Formula One success, lightweight engineering, and aerodynamic mastery is not just marketing. It acts as the non-negotiable technical ingredients for every vehicle we produce. Our UK Heathrow Center preserves that driver-focused DNA, while our global R&D and ecosystem translates Chapman's lightweight principles into the breakthrough electrification. Our 800-volt pure electric and 900-volt X-hybrid architectures solves the core problems of generic heavy EVs, delivering track-level handling paired with long-range daily usability. And unlike pure EV startups, which lacks the performance pedigree or the legacy luxury brands slow to the electrification, we own both motorsports brand equity and the proprietary scalable EV technologies. This dual strength drives premium pricing power, expanding gross margins, and diversified revenue. Thank you.
Great. Thank you so much for that excellent overview. And I would be remiss if I didn't say I think that the cars are absolutely beautiful. So with that, I'll turn it over to Eric.
Okay, thank you, Tim, and thank you, Dr. Wang, for joining us today. We really appreciate your time. So, first question, let's get into just your turnaround story. So, when we take a look at the 2025 performance, your revenues fell 44% to 519 million, yet your net loss narrowed 58% to 464 million, and the adjusted EBITDA loss improved by 63% to 356 million. So your gross margins more than double, and they turned positive in the fourth quarter at 10%. So how do you frame the performance for investors? Is this a deliberate strategic reset? And what does the trajectory signal about things looking forward?
Thanks, Eric. It's a very good question. First, allow me to briefly, frame the 2025. And for the investors, the 44% revenue drop to 518 million US dollars reflected our transitional performance, hampered by the tariff headwinds, gradual inventory destocking, and phased rollout of our upgraded modules. And we actively pulled back, low margin, heavily discounted volume, and also the streamlined our unprofitable region sales. And the profitability metrics tells the path to a clear success story. Gross margin more than doubled from 3% to 9%, I just mentioned, while the net loss shrank 58% and adjusted EBITDA loss improved 63%. These are the structural gains, not one-time, cost cuts only. This margin upward, trajectory is our core forward signal. It's a founding pillar of our Focus 2030 strategy, which I think we can later on explain in more details. Moving ahead, we will scale high margin super hybrid modules, maintain strict pricing discipline, and capture the manufacturing scale benefits. We will resume sustainable, profitable revenue growth without reverting to loss-making volume tactics, and driving consistent margins expansion throughout 2026 and beyond. Thank you.
Great. Okay, thank you. Let's take a look at the 4Me, your super hybrid launch. So the 4Me, known as the Eletre X in Europe, is built on your 900 volt X hybrid architecture and has a range of more than 1,400 kilometers. It debuted in China in late March, and European Union wholesale is slated for the end of October of 2026, and the UK and Middle East will follow. What are your delivery volume targets for the 4Me, and how quickly do you expect the market outside of China to ramp for the vehicle?
Yeah, thanks, Eric. In China, the for me show early momentum already with over 1,000 orders in the first launch month, which is in line with our expectation, and we target steady monthly deliveries throughout the 2026. And overseas ramp is fixed already. We already launched the Eletre X in the continental Europe, and the wholesale will kick off in the fourth quarter this year with a 3 or 4 month steady ramp to run rate by early 2027. And the Middle East is expected to launch shortly after the EU year-end. UK right-hand drive homologation pushes deliveries to the summer of 2027. And this long-range X-hybrid SUVs, uniquely solve the European charging anxieties, and so we expect faster order conversions once the EU delivery is starting this year. Thank you.
Great. Okay, so let's take a look at the path to improving gross margins. So when we take a look at your numbers, gross margins improved from 3% in 2024 to 9% in 2025. This was driven by upgraded model deliveries and disciplined cost control. So what are the specific levers? Model mix, localized procurement, scale, reduced sports car discounting that could move Lotus towards the 20+% gross margins that are typical of your luxury automotive peers. And what is a realistic time frame to get there?
Yeah, it's a very good observation for our profitability performance. Our 3% to 9% gross margin jump in 2025 is already a starting point, and with four tangible and layered levers set to push us to luxury peer 20% plus gross margins. And first, it's on the product mix. The higher margin for me X hybrid will become our volume backbone for this year, and later the Type 135 sports car is expected to become the halo of the brand and contributing a higher gross margin rate. And second, on about the strict pricing discipline, we have eliminated the deep vehicle discounts globally, and protecting residual values and average transaction prices long term. And third, on supply chains efficiency. We have localized battery and component procurement, cuts material costs, paired with the scale leverage from our dedicated EV manufacturing hub to spread fixed overheads across the more units. And fourth but not the least, on platform cost optimization, our shared PHEV architectures reduce per-model engineering and tooling spending. So regarding the timeline, we target double digits gross margin by full year 2026, sustained by the For-Me launch and the Eletre ramp in Europe. And we would be able to hit a 20% plus luxury peer benchmark by 2028 in my understanding. And once the high margin models dominate our global sales mix, manufacturing scale mature fully, and also supply chain localization delivers full cost savings. So these are the preconditions for us to achieve this number by 2028. So overall, to my understanding, this trajectory is structural, not temporary. Thank you.
Okay, that's fantastic. Thank you. So let's take a look at your liquidity situation. So you ended 2025 with about 73 million of unrestricted cash, and you have a master credit facility from Geely of up to 1.6 billion RMB. So can you walk us through the near-term financing plan, just the interplay of the Geely facility, the Lotus UK consolidation, and any external capital? And how close would you say Lotus is to operational cash flow break even?
Yeah, that's a question I was often asked by you and analysts and the investors. I think we ended 2025 with $73 million unrestricted cash, plus GD's RMB is 160 billion and zero point 0.6 billion master credit facilities as our core liquidity buffers. And near term, we first draw this facility to cover the Lotus UK consolidation costs, streamline the cross-border working capital, and fund market fund spendings. But we always, keep the external capital raising as an option. And if we see the accelerated, the global volume expansion, that's also the reason why we got listed in the stock markets also. And on the cash flow break even, our margin expansion would narrow operating cash flow, cash burn rapidly. So we expect to hit operating cash flow break even by 2028, driven by the For-Me overseas ramp and also the launch of the next generation sports cars. I just mentioned the Type 135, and also along with the synergy with the Lotus UK acquisition and the sustained gross margin uplift from our optimized product mix. Thank you.
Okay, great. Okay, thank you. So let's take a look at the board transition, some recent news, and obviously your relationship with Geely. So at the start of June, Joe Zhang, Vice President and Chief Financial Officer of Geely Holding, was appointed chairman of the board, succeeding Daniel Lee, who stepped down for personal reasons. So Geely is simultaneously your largest shareholder, a key creditor, the Lotus UK put option counterparty, and now through Mr. Zhang, also the chair of Lotus. So what does the new chairman bring to the execution of your Focus 2030 strategy?
Yeah, that's a very good question. Actually, that's about one is about what the Focus 2030 will announce in May, and also another one is the change of the chairman of the board. So it's a good question, so that I can answer the both questions in one. And Focus 2030 is a multi-year plan to scale our luxury product portfolio and reach sustained profitability with the four core pillars of the brand, which includes the brand enforcement and the multi-powertrain roadmap, the close collaboration with the Geely, and the fourth one, the disciplined financial stewardship. So I think it's in the June, and you can see the release that they we have the new chairman of the board, and the Geely is in the Geely Holdings Group CFO, the Joe. brings take place of the chairman, and he brings three core strengths to accelerate our Focus 2030 strategy, in my opinion. First, he aligns our largest shareholder, creditor, and put option counterparty under one unified oversight, streamlining access to the GD's credit facility also. And second, his decade-long strategic finance expertise would get us faster to operating cash flow break-even, just we talked about. And third, he deepens across group supply chains and platform synergies to cut unit costs. This unified governance removes, coordination friction, ensuring every pillar of our 2030 roadmap advances with the consistent financial backings. So that's my understanding to your question. Thank you.
Okay, great. Thank you. So let's take a look at the North America strategy. So the U.S. With U.S. tariffs essentially, closing the door on China-built EVs, it seems like you've pivoted to Canada. The Eletre entered the Canadian market via exports starting in late April, and you've described it as the only China-built EV homologated in North America that's above $80,000. So, how large can North America realistically become on this footing? And is Canada a genuine bridgehead for the region or just a holding position while you wait on on any changes in US trade policy?
Yeah, I just quoted it before. I think the this movement for us is very meaningful because it's I had a metaphor, just as Armstrong landed on the moon, that little step of him is just a big step of human beings. So I think the our well the first batch of our products already shipped to the Canada, and we expect to get the deliver to the dealers in the end of this month. Uh, my understanding is, firstly, the Canada itself carries meaningful volume potentially as our exclusive North American launch foothold for the premium EVs above 80K US dollars, and the country's high net worth luxury buyers pace plus the preferential, 6.1 tariff quota would let us scale steadily. We target sustainable annual Canadian run rate growth throughout the 2027, capturing a dedicated in the performance luxury segment. And this market is far more than the temporary holding position. It's our long-term bridgehead into the North America's broader region. And we are building a full dealership over there, service and also charging infrastructures also. So expect to validate Lotus premium brand, customer experience, and homologation standards. While the steep the U.S. tariff, create barriers to direct China-built imports today for our EV cars, and Canada's established footprint. This de-risk, any future in the U.S. market if trade policies get softened. So that's my understanding to it. Thank you.
Okay, great. Thank you. Okay, so let's take a look at the ECARX strategic partnership. ECARX, another company that's part of the Geely ecosystem. So in December, ECARX subscribed for 16.8 million newly issued shares at $1.37. So that was essentially a $23 million investment that deepened your already existing relationship that you had with the company. So beyond the capital, what does ECARX bring in terms of cockpit software, entertainment, and ADAS capability? And how does that partnership differentiate Lotus in the intelligence race against other, bigger players in China like BYD and NIO and some of the other Chinese luxury EV players?
Yeah. So beyond the capital, ECARX delivers core full stack intelligent assets, which helps, cut our software R&D spending and thus speed up, the overseas homologation. So collectively, the combination of Lotus heritage performance vehicle engineering and ECARX full stack automotive software capabilities carves out a distinct competitive moat in the global premium smart EV segments. And this partnership creates a clear differentiation with our peers. Of course, thank you for mentioning the big names. the combination of Lotus and Eletre X would create an advantage that rivals can barely match, in my opinion. And this aligned equity tie-up locks long-term co-development, lifting vehicles pricing powers for us. And also, I think it's also very beneficial to the development of the Eletre X. That's a two-way beneficial situation. Thank you.
Okay, great. Thank you. Okay, so last question here. Let's talk about the investment case. So the stock is trading below the original $10 SPAC reference price. But with a globally recognized brand, you have your losses are narrowing. You have a major super hybrid launch underway and the Lotus UK consolidation ahead. So for the WTR audience of small cap investors, what is the single most compelling reason to own Lotus today? And what is the one milestone over the next 12 months that you think investors should be looking out for?
Yeah, that's a very good question. I think the different investors had different reasons to buy and hold the Lotus stock. And for small cap investors watching, lot trade, the single most compelling investment case, in my opinion, is our unique position as the only brand in this market, that has both of the following features. First, over 75 years of European performance heritage, racing DNA, and global luxury brand legacy that no domestic Chinese brand can replicate. And of course, it includes the startup companies that in the industry. And second, we have full Chinese native manufacturing, supply chain, and technology capabilities backed by the GD. And we can iterate, faster and price more competitively. So I think this is a very additional, advantage, added to our, existing capabilities in the UK. And in short, the foreign legacy brands may like China speed, and the domestic China brands may like, the performance heritage, but we have both. So the critical milestone to validate this thesis over the next 12 months, I think include the hitting of the full year, double-digit full year gross margin in 2026. And this target relies a lot on the rampant super hybrid global deliveries, disciplined pricing, and completed Lotus UK overhead consolidation. So clearing this gross margin benchmark will confirm our profitability trajectory is durable, demonstrated we are on the right track to hit luxury peer 20% in the margins by 2028 and beyond. So I will appreciate, if the small cap investors can, take a look at the Lotus, and we'll be very happy to answer any questions they may have also. Yeah, thank you.
Okay, great. Thank you, Dr. Wang. And thank you, for walking us through the Lotus Technology story. As Tim said earlier, the vehicles are beautiful. I'm very happy to see the improving results, and it looks like you guys are on a potentially, really good trajectory going forward. So thank you for joining us, and I look forward to keeping track of the story.
Yeah,
Tim, now back to you.
thank you,
Thanks,
Eric.
Eric, for those questions. And Dr. Wang, thank you for joining us today and for sharing those very detailed answers on Lotus Technology. Great, great vehicles, great company, and thanks so much for your time.
Thank you, team. Thanks, Eric. Appreciate it. Yeah.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.